Singapore's exports in June continued to disappoint, slumping by 8.7% on year, marking its fifth consecutive month of contraction. Analysts expect better numbers next quarter, but as Nadirah Zaidi finds out, the export recovery is still set to be bumpy in the short term.
Non-monetary gold was the biggest drag to Singapore's non-electronics exports in June, tumbling more than 50% on year. Contraction in specialized machinery and food preparations, coupled with high base effects, also made the decline steeper.
Last year registered quite high values for these products, and it's quite hard this year for these exports to match it. And number two is that most of these exports were to our Singapore's major trading partners like the US, the EU, and China. And domestic demand in those markets have still been quite weak, and that is why I think these non-electronics NODX the recovery has still been quite choppy as of now.
Electronics exports also slipped 9.5% on year. It's mainly due to a drop of exports in telecommunications equipment, disc media products and integrated circuits. But this one-month dip isn't concerning for market analysts.
If you look at the trend of Singapore electronics exports on a 3-month moving average basis, that's actually turned around quite significantly from the double-digit contraction that we have seen in most of 2023. And in fact, in June, on a trend basis, it's still in expansion.
Even then, the road to recovery seems bumpy, with risks like the ongoing port congestion and uncertainty over the election outcome in the US.
It sort of presents a major uncertainty beyond the cyclical horizon for 2024. So if Trump were to secure a victory for a second presidency, I think one of his policies is quite protectionist in terms of imposing tariffs on China and also other countries as well. And Singapore would therefore be negatively affected.
Experts are now keeping a close eye on the third China plenum for signs of supportive policies that could in turn boost Singapore's exports to expand for the full year.